What if the next great wealth opportunity for the diaspora is not in land, not in crypto, not in Airbnb, but in electricity itself? What if the people who control when power is available, where it flows, and how it is stored become the next generation of infrastructure millionaires? Because right now across Africa and many emerging markets, a quiet financial shift is underway. Not in the headlines, not on social media, not in the usual diaspora investment seminars, but inside solar farms, battery banks, mini grids, captive industrial power systems, smart metering networks, and decentralized energy corridors. And those who understand it early may not just make money, they may position themselves to own one of the most important income-producing assets of the next 20 years. So here's the real question. Why are so many diaspora investors still chasing crowded, overhyped opportunities, while one of the most powerful infrastructure wealth plays is sitting right in front of them? And here's the uncomfortable truth. In many underpowered economies, electricity is more bankable than real estate, because a house without reliable power is a liability. A business without power bleeds money. An industrial zone without power stagnates. But the person who solves the power problem, that person gets paid again and again and again. In this video, I'm going to break down what electricity arbitrage really is, why decentralized power is becoming a serious wealth vehicle, how diaspora capital can enter this space intelligently,
and why this may become one of the most strategic forms of wealth preservation and long-term cash flow in the modern African economy. This is not hype. This is infrastructure. This is systems thinking. This is strategic ownership. And if you stay till the end, you'll understand why the next class of diaspora wealth builders may not just buy property, they may buy power. Welcome to the Diaspora Project Media, where we decode the future of diaspora wealth, strategic ownership, infrastructure investing, and high-value economic opportunities across emerging markets. If that's your lane, stay with me. Because this one is bigger than most people realize. Let's start by simplifying the term. Electricity arbitrage is the process of making money from the difference in value of electricity across time, location, or supply conditions. In plain English, you acquire power when it is cheap, available, or self-generated. Then you store it, redirect it, or sell it when power becomes more expensive, more scarce, or more critical. That's arbitrage. It's the same principle behind buying an undervalued asset and selling higher, buying land before development, buying dollars before devaluation, or buying supply before demand spikes. But in this case, the asset is energy, and that changes everything. Because electricity is not just a utility anymore. It is becoming a financial asset, an operational asset, a resilience asset, and in some cases, a geopolitical asset. There are several ways this works. Time arbitrage: generate or buy electricity when it's cheap or abundant, then use or sell it during peak demand. Reliability arbitrage, where the public grid is unreliable, and reliable electricity becomes more valuable than ordinary electricity. Source arbitrage: replacing expensive diesel or unstable grid supply with cheaper alternatives and profiting from the difference. Location arbitrage: areas with severe power shortages create stronger demand for private electricity systems. Industrial productivity arbitrage: businesses will pay heavily to avoid downtime, so reliable power becomes extremely valuable. This is why decentralized power is becoming so important, because centralized national grids in many developing markets often cannot keep up with demand. And when a central system underdelivers, distributed systems emerge. That's where opportunity lives. Now, here's where this becomes deeply relevant to the diaspora. For years, diaspora money has often gone into land, family housing, remittances, that unfinished building projects, retail businesses, or reactive support. And while some of that creates value, a lot of diaspora capital gets trapped in low-yield, emotionally driven investments. Many people are not losing money because they don't work hard. They lose money because they are placing capital into assets that don't compound well.
Now compare that with power infrastructure. Power infrastructure can create recurring cash flow. It can offer dollar hedge potential if structured properly. It has a strategic utility because power is not optional. It enables productivity across sectors, and it can stabilize a portfolio in ways speculative assets cannot. This is the pivot. The diaspora must stop thinking like consumers of infrastructure and start thinking like owners of infrastructure. Instead of asking, how do I build a house? The better question becomes, how do I own the power that makes communities and businesses function? That is a completely different class of wealth thinking. To understand the opportunity, you must first understand the failure point. Many national electricity systems were not built for current demand. Even where generation exists, issues like transmission bottlenecks, distribution inefficiencies, weak metering, underinvestment, and governance challenges limit performance. Now, add rapid population growth, expanding consumption, industrialization, digital infrastructure, and urban density. The result is a widening energy deficit. And when a system cannot supply enough reliable electricity, the market improvises. Generators everywhere, solar rooftops multiplying, battery storage becoming normal. Arts private estates seeking captive power, industrial parks demanding dedicated energy. This is not temporary. This is a structural shift toward decentralized power. Electricity generated, stored, and managed closer to where it is used. And where there is structural dependence, there is monetization potential. Most people still think of electricity as a bill, but smart investors are starting to see electricity as an asset. Just like a rental property produces rent, a toll road produces income, or a telecom tower generates revenue. A well-structured energy asset can produce power-linked income. The highest value electricity is not necessarily the cheapest. It is the electricity that solves a costly problem. If a cold room operator loses thousands from power failure, your stable power is worth a premium. See, if a factory loses production hours, your power is worth a premium. If a hospital needs uninterrupted operations, your power is worth a premium. You are not just selling electricity, you are monetizing reliability, continuity, uptime, and productivity. Now let's talk about where the real opportunities are. Residential estates are becoming power clusters as homeowners seek alternatives to generators and unreliable supply. Industrial clusters and SMEs represent one of the strongest sectors because outages directly translate to financial losses. Telecom and digital infrastructure require dependable electricity and understand the economics of uptime. Agriculture and cold storage depend on power for preservation and logistics. Healthcare and institutions cannot afford uncertainty. And real estate integrated with energy systems becomes far more valuable than standalone buildings. Energy doesn't just generate income, it re-rates property value. If diaspora investors want to participate intelligently, they must understand the business models. Energy as a service creates a recurring revenue. Captive power systems serve dedicated high-value users. Embedded community power builds localized energy ecosystems. Storage arbitrage captures and releases energy strategically. Hybrid systems reduce diesel dependence. Anchor tenant models stabilize project economics. This is not just about technology, it's about demand quality, billing systems, governance, and operational control. That's where the money lives. Now let's go deeper. Why could this become a wealth preservation strategy? Because in volatile environments, people need assets that are real, useful, monetizable, and essential. Electricity infrastructure checks those boxes. It is embedded in housing, business, logistics, healthcare, agriculture, and digital systems. That gives it strategic relevance, and strategic relevance often protects value. This doesn't mean every project is safe. Risks exist, but properly structured energy assets sit at the intersection of infrastructure, recurring revenue, and long-term demand. Now let's talk about the risks. Bad project economics can destroy returns. Weak collection systems collapse cash flow. Poor technical design affects performance. Regulatory misunderstandings create exposure. Trust-based investing without structure leads to losses. And mistaking equipment for a business is a major mistake.
Healing, the real value is not in panels or batteries alone. It is in contracts, demand, governance, and collections. So how should diaspora investors think about entry? Focus on demand, not hype. Target productive users. Prioritize operators and governance. Think in systems, not isolated assets. Start with structured participation, demand transparency, and think long-term. Infrastructure wealth is built through disciplined positioning. Here's the bottom line. For a long time, electricity was treated as a background issue, something technical, something boring, something governments would fix. But that era is changing. Because in a world of unstable grids, rising demand, industrial expansion, and decentralized systems, electricity is no longer just a utility. It is becoming a wealth layer, a strategic layer, and an ownership layer. And for the diaspora, this may be one of the most overlooked opportunities of this generation. Not because it is flashy, but because it is fundamental. Maybe the next frontier of diaspora wealth is not just owning homes. Maybe it's owning what powers them, not just buying land, but controlling the energy that unlocks its value. Not just investing for appearance, but investing in systems that produce income, resilience, and strategic relevance. And if that shift happens, electricity arbitrage may not just be an energy story, it may become a diaspora wealth story, a very big one. If this changed the way you think about wealth and opportunity, then stay connected and ask yourself this. Would you rather own another empty plot of land or own the power system that generates income every month? I'll see you in the next one.